Hi there. How are Kenyan stocks doing? Or simply put, how are shares at the Nairobi Securities Exchange faring on? Is what I'm going to be looking at in this video. Doing an analysis based on share price and also fundamental out there, which I think is critical that we discuss to make sense of the shares which are winning, the ones that are losing, and also what all these means to investors. Basically, thinking about how some select shares are going to perform going forward. That's what I want us to discuss in this video. And of course, we're going to use data for last week as proxy to make sense of any increases, any decreases, and even try to have a sense of how the shares are going to perform this week and also going into the future. You are all much welcome to my channel. In case you are new here, my name is Afagzad Sifuna. I am a finance expert and qualified accountant, bringing you these amazing videos each and every day to break down concepts around investing, making money, so as to equip you with knowledge you can utilize to make an informed decision. In case you love such kind of content, kindly consider subscribing to this channel. Down there is a button called subscribe. Click on it, subscribe, and I will still add it. Drop a like on this video. Thanks for subscribing and also liking this video. Having said that, I'm going to examine these sector by sector. The Nairobi Securities Exchange, when it comes to equities, specifically stocks, has 13 sectors. So we're going to go through all of these one by one to try and make sense of what is happening. And the first sector is the automobile sector. When I look at it, there is a lot going on because that sector only has one company listed at the NSE, and that is the Car and General Limited. When we look at the number of Car and General last week, at close of Friday, the share did dip by 4.6%. Basically, it was a share depreciation. And that is not by accident. Recently, we've been having dynamics around the automobile sector, a good chunk of them anchored in the Finance Act, which of course we all know the President assented a few weeks ago. Among the things in the Finance Act which touch on automobile are two things which stand out. The first thing is there being excess duty 50% on antique or vintage cars. Basically, any antique or vintage motor vehicle attracts 50% excess duty. And then second thing is there being mandatory marine cargo insurance. Prior to this Finance Act, this was more about it being optional, despite the Marines Act of the country specifying such kind of charges. It was more of optional. So the Finance Act is actually pushing for the enforcement. And this enforcement began on 1st of July, meaning all the cargos have to have marine cargo insurance. And that basically means spare parts and even cars coming into the country or vehicles, the price are bound to go up, okay? What does it mean to business? Are people out there going to be purchasing new units, used units, or even units from Juakali? That paints the picture to you as to how the sector is quite shaky, and that's why the only company listed at the NSE is on the red. And then the second sector I want us to look at is agriculture. This is an interesting sector because last week agriculture had a mixed results, where some companies had some positives, others were on the negative. But the agriculture sector has over 5 different companies. The company which stood out for me is the IGAD's company. IGAD's Kenya Limited is an amazing company in the agriculture sector, which deals with Arabic coffee. They do exports and also do manufacturing for the local market. And last week, their stock was up 1.5% as of Friday. That by itself might look like a small percentage, but guys, I'm quite upbeat about the IGAD stock doing well going into the future. Reason being, we are talking about it being in a very definite sector. And the interesting thing is that just a few weeks ago, in fact it was 2 weeks ago, we saw the government, the president himself, announced they are implementing reforms in the coffee sector in the country, And these reforms are bound to see the different entities in the coffee sector have refined value chain, ensure there is liquidity, ensure as a country we get back to where we were on the export of coffee. Such kind of macro factors are bound to also bolster the share prices of companies like IGAD because it is specialized in coffee. Okay? And with that, in the agriculture sector, I'd bet on IGAD. And then the third sector, which I want us to look at, is the banking sector. Of course, in the banking sector, a lot is going on. But two stocks which stand out for me is the HF Group stock and the Equity Bank stock. These two stocks, each of them, rose by over 2.4% as of close of Friday last week. Okay? And also, a honorable mention is also I&M. I&M stock rose upwards of 3% at the close of last week. That's honorable mention because also I&M Bank has been having some amazing traction recently. Among them, it is having revamp in its leadership. We saw 2 weeks ago, I&M Bank did poach the CEO of Absa Bank Kenya Limited, Mr. Mohammed, to become the CEO of I&M Bank Kenya Limited. And also at the same time, it did poach the Group Chief Information Officer of Equity Group Limited to become the Group Chief Information Officer of I&M Group. That tells you they are also bolstering their leadership to ensure they have very solid management. And beyond that, generally in the banking sector, things have been positive because the banking sector has been having an amazing rally, more so in the recent years. And the two stocks of interest are HF Group and Equity Bank Kenya Limited. As to why I've chosen these two stocks and also why I think these two stocks are going to continue seeing increase in their share prices, basically share appreciation, is because of a few fundamentals. Beyond the share price, a company like HF Group, which of course we know is housing finance, sometime early in the year, did have two interesting fundamentals which came out. That was about March. Among the fundamentals was implementation of some of its employees, of course most of them senior executives, having ownership in the stock of the company. Basically put, stock worth 1 billion shillings was shoved off to be owned by employees. And then beyond that, we also saw the profit of HF Group increase by 250% in 2025 compared to 2024 because the profit of HF Group in 2025 was 1.6 billion Kenya shillings, yet in 2024 it was about 480 million Kenya shillings thereabout. That rally of profit increasing 5 times and also the confidence of allowing a number of employees to own their shares, that tells me HF Group is onto an interesting trajectory. And if the top executives have invested in the stocks, guys, they'll work very hard to ensure they protect shareholders' value. Don't you think so? And then the second company in banking, Equity Bank Kenya Limited. You all don't need to be explained who Equity Bank is. Equity Bank is the most profitable financial institution in the entire East and Central Africa because its profit for last year, profit for Equity Bank was 75.5 billion Kenya shillings. That is profit after tax. Before tax, it was upwards of 100 billion Kenya shillings, making it the most profitable financial institution in East and Central Africa. And true to its regional presence and expansion prospects, Equity Bank is doing an amazing thing in DRC Congo, which I think you need to know because it also have a net effect on how the different stocks or shares perform. Equity Bank is looking to establish insurance companies in Congo. Of course, we all know Equity Bank did gain entry into Congo about 10 years ago, 2015. It gained entry into DRC Congo. And in just 10 years, Equity Bank is the second largest financial institution in Congo within the banking sector, specifically in DRC Congo, when it comes to banking, with a market share upwards of 26%. Now, they are gaining traction in the insurance through two greenfield operation projects. Simply put, they are setting up these two insurance entities from ground up. They are not acquiring insurances there and trying to see how to reconfigure them and rebuild them. They are setting them up from ground up. And the two are going to focus on life insurance and general insurance. They are at advanced stages of this, and I'm very sure the ripple effect of this is going to be felt on the profit, on the bottom line of Equity Bank. And that's so because a country like DRC Congo has a population upwards of 116 million people. That tells you Congo is almost twice the size of Kenya. That is a very big market for whether it is banking services or even insurance. That is why I'm positive, based on business performance of Equity, together with its prospects of expansion in the region, their stock is most likely gonna continue being on the rise. And then the other sector which you need to look at, the fourth sector, commercial and services. Guys, this sector is fascinating because most of the companies in this sector are not doing that very well. Commercial and services sector is having a hit. But then again, a stock which is worth mentioning because of recent changes. Please note, I'm not saying it's doing very well. It is not doing well. But speculative guessing of maybe it navigating out of the current dynamics, it might do that, but it might take time. So it's more speculative, okay? Is the stock of Uchumi supermarkets. Of course, we all know Uchumi supermarkets had very huge financial trouble a few years back. But this supermarket has started regaining entry into the market. Starting with a few weeks ago, it reopened two of its branches in Nairobi, the Langata branch and its branch at Unicity Mall near KU's University along Thika Superhighway. With the reopening of these two branches, it's trying to regain its entry into the supermarket or the wholesale kind of dealing within the country. And beyond that, Uchumi supermarket is also repurposing its previous properties to jump into property management so that it can rent out most of these properties which it used to own and start also kind of like diverting a bit to property management. That is why we saw the shares of Uchumi kind of like be speculative and increase, because as of close of Friday, the shares of Uchumi increased by 2.9%. All that was driven by the recent endeavors and speculation. Please note, I'm not saying Uchumi is gonna become the biggest thing in Kenya. We all know the supermarket sector is very competitive. But another thing, just maybe to give you confidence, or even as we look at this, is that unlike other supermarkets out there, Uchumi's largest holding is by the government of Kenya. Hold 14% stocks in Uchumi. So if the government has a hand in it and then manage to navigate, maybe just maybe Uchumi might begin to recover in a way that its stock might actually rise. But that is speculative, not that, okay? And then the fifth sector, which is construction and allied services. Guys, this sector is not doing good at all. Of course, it has shares of companies like the cement companies, Bamburi, the earth mining, and also painting companies, okay? Like, for example, the shares of Crown Berger and even shares of, for example, East Africa Cable. All those fall under construction and allied services. This sector, all those companies were in the red last week. And it is perfectly understood. Things have become quite difficult in the construction sector. The cost of doing business has increased. And in case you are out there, you are doing construction, you can even attest to it. Things are not easy. The costs do fluctuate and the cost of business has increased. That is why these companies were in the red. And based on that, I won't really say we need to jump on any stock in these companies because the sector is having a difficulty. And most likely, this difficulty is going to continue being there. And I'm saying so because most of these companies in the construction and allied services rely very heavily on even things like fuel for them to be able to produce whatever they're producing to push the market. Right now, we're talking about the macro factors, even things like, for example, wars which are going on in the Middle East. Those are also affecting the supplies of fuel. And if the cost of fuel goes high, guess what? Manufacturing sector, construction sector are hit real big, okay? That is why the construction sector has taken a very big hit, because combination of all these factors, okay? And then the other sector is energy and petroleum. Under energy sector, I'm going to pick the share of KenGen, the Kenyan electricity generating company. The share of KenGen last week as of close of Friday, it had increased by 1.6%. That is a small increase. But what is making me upbeat about the share of KenGen is its plan around it increasing its sources of energy. Because earlier in the year, KenGen was very clear it is getting and going very hard on renewable energy. That tells you already it has some form of monopoly because it's the biggest generator of electricity in the country. And so it's expanding. Of course, we all know it's going to require capital, huge capital to make it happen. But then again, its monopoly status, its close affiliation to government is going to enable all these things to happen. Once it gets into renewable energy, we are talking about the stocks or the shares of KenGen are bound to have a crazy rally. That's why I'm picking the shares of KenGen as the company I'm betting on in the sector of energy and petroleum. Of course, the increase is just moderate, but based on the year's announcement earlier in the year in Q1 and a strategy to advance into renewable energy, things are going to go up, okay? And then sector number 7, insurance sector. Guys, insurance sector is an interesting one because it had mixed results. But the company which stands out for me in this sector is Britam. This company, which is the British American investment company, has been having interesting progress. And what is more exciting to me about Britam is also its recent exploits in the region. Just like Equity Bank, Britam is also looking to go very hard in DRC Congo. Of course, as of close of last week, Friday, the share of Britam increased by 3.1%. That is a good increase, right? The biggest lever for Britam is going to be it's getting and expanding into the DRC Congo, a country with upwards of 116 million people. Of course, already Britam is regional in a few countries in East Africa and Southern Africa region too. Now, it getting into DRC is going to be a big thing. Of course, the plans for Britam to get into DRC have been ongoing since mid last year. But then again, they've been delayed a bit due to Ebola situation. Unlike Equity Bank, whose approach is setting up the projects right from the scratch, okay? Britam is looking to acquire an insurance company within DRC and then utilize that particular entry to be able to revamp that company and grow within DRC Congo. That is his strategy. And of course, even these is at advanced stages because discussions began mid last year. And I strongly believe that expansion is going to play out very well for DRC. Like the way, for example, we saw the expansion of Safaricom into Ethiopia. Of course, there are different sectors, but I'm just pinpointing to you the benefit of getting into a country with very high population and also ramping up your market share. In case company can be able to do that, its stocks is bound to increase and even its dividend payout are also bound to increase. And then the 8th sector is the investment sector. Unfortunately, guys, in this sector, I won't pick any company because this sector has also seen very bad things. It hasn't been easy. Companies like, for example, TransCentury, companies like, for example, Centum, have been having lots of kind of restructuring recently, try and get capital at hand, okay? Get some cash flows up and even letting go some of its ventures or affiliates. For example, the Nabo Capital is also being fully independent from Centum and lots of movements in that sector. That is why, because the investment sector is not really having any traction, is more at a doji or even some companies on a negative, I wouldn't really bet on any company in this sector until we really have a good direction of where these companies are going at. By the way, what do you think about that? What do you think about the recent Centum maneuvers? What do you think about the recent TransCentury maneuvers? And then, sector number 9, investment services sector. For this, we only have one firm there, which is the Nairobi Securities Exchange, which is listed on this particular sector. Last week, each share as of close of Friday had increased by 2%, which, by the way, I think, guys, is very amazing. And that increase is not in futility. Two things I think are playing in its favor. It is early last week where we saw leadership at the Nairobi Securities Exchange change because the chairperson was appointed, a new chairperson. The previous chairperson of NSE had been Kiprono Kitonyi, who sometime in March moved to become the chairperson of Kenya Airways. And at the Nairobi Securities Exchange, the new chairperson who was appointed to replace him is Mr. Tom Mulwa. Tom Mulwa is a seasoned executive, better known as the long-term MD of the Larson Group. This is a seasoned executive who is bound to bring change into the NSE and is joining the NSE chairmanship at an interesting point in time where NSE is looking to fully implement its 2025 to 2029 strategy because the NSE has a strategy which is looking at increased automation, looking at expanding the offers within the security exchange, looking at locking in more investors. So it is the new chairperson and of course the management who are going to be working close together to see how to realize all this. Okay? And that is why I'm also betting on this company. I think the NSE stock price is going to increase. And then the 10th sector is manufacturing. Guys, manufacturing has been having a mixed results. Not really increasing that fast too, because remember, as I said, some of the macro factors, even beyond the country, do impact the companies out here. And manufacturing sector is very heavy on utilizing fuel. But then again, also manufacturing sector does push this cost to consumers through increase in prices. So in this sector, the companies I'm going to pick are three. Two of these companies are mature companies. One is a new or growth company. The mature companies I'm picking in this sector are the BAT and the East Africa Breweries, EABL. Both these companies, as of close last week, didn't have an increase upwards of 0.5% on their stocks. But then again, something interesting exists with these companies. These are mature companies in the market, which are proven year in, year out, they do become profitable. Because I don't remember you even remembering any time EABL made a loss. People out here are drinking alcohol. The same thing with BAT. I don't remember you remembering any time BAT made a loss. Yes, the tobacco sector is having challenges, but BAT is constantly making profits. Based on this, these companies have a history of paying amazing dividends. In fact, EABL, I think it paid a dividend of about 4% yield last year. BAT it was upwards of 15% yield. That tells you don't just need to tap onto share price appreciation. You can invest in these mature companies and enjoy investing in these dividend stocks because at the end of the year, you're going to enjoy dividends, whether it is interim or final dividends, which add up. And then the growth company is Shri Krishna Overseas Limited. Shri Krishna Overseas Limited, as of close of Friday, it had a share appreciation of 3%. That's not the amazing part. Of course, this company, the Shri Krishna Limited, is at an interesting point in time because it was the first SME company listed under the SME segment a year ago. It was listed at the Nairobi Securities Exchange sometime mid-2025, and it's been gaining traction slow but sure. Where its major turning point is, and unfortunately or fortunately, is dependent on one thing. This Shri Krishna Limited is a company which deals with corrugated packaging material. Most of the packaging around boxes you see in the country come from Shri Krishna Overseas Limited. They are banking on increasing their capacity, where they are currently constructing a factory in Kisaju in Kajiado. And through that particular plant, they are looking at increasing their annual production capacity sevenfolds. Right now, they are producing about 3,000 tons annually. They are looking to scaling that up to 22,000 tons when a particular project or plant construction is complete. So this really anchored on this particular plant being complete. Because guys, if it is not complete, then the confidence that shareholders are having in this particular stock might just erode. In case it's completed on time and then capacity is increased, Shri Krishna Overseas Limited might just be in very big business and it might increase big time. And then the 11th sector is telecommunication sector. Telecommunication sector has Safaricom, and by the way, guys, I'll pick Safaricom. Share any day, any time. And I'm saying that because we've all seen Safaricom rally amazing numbers year in, year out. Case in point in business performance last year, we were talking about Safaricom having profit upwards of 100 billion Kenya shillings, and it's the biggest company in Kenya and the biggest and most profitable company in East and Central Africa. Safaricom has been doing amazing numbers, and also its share reflects that. And also, most importantly, Safaricom is a mature company. Last week, at the bows, it didn't really rally very high numbers. Its increase was just 0.14% on the shares. But just like EABL and also BAT, I would really bank a lot on Safaricom's share price appreciation. Reason being, Safaricom already has unique competitive advantage. It's doing very big on M-Pesa. It's doing very big on data. It's doing very big on business solutions, okay? And beyond that, it also has a history of paying amazing dividends. Because last year, dividend yield for Safaricom was about 7% per share. Guys, that's very big. Because of the ongoing business prospects, already Safaricom having been proven to be profitable, its maneuvers in the Ethiopia market, that tells you chances are Safaricom is going to continue being profitable, and even its profit is going to increase. And it's going to also continue paying shareholders dividends, most likely, because it isn't really embarking on a very big expansion project. Reason being, it is a mature company so far. That is why under telecommunication, Safaricom any day, any time, whichever the price get in. Yes, the share appreciation, but beyond that, there's dividends and future growth potential even within the region. And then sector number 12, real estate sector. Unfortunately for real estate, I won't pick any company because, guys, the REITs or the real estate investment trusts at the Nairobi Securities Exchange haven't been doing very well. And I think that's just a reflection of the underlying real estate sector dynamics, where also the properties are not moving that fast because, of course, of the constrained cash flows in the economy and also the cost of construction being fluctuating and going up and up. The underlying assets which these REITs are riding on haven't been doing well. And that is why I won't pick any company there until there is a clear upside potential. Okay? And then 13th sector is the exchange traded funds. Also, guys, the ETFs, unfortunately, I won't pick any ETF which is currently listed at the Nairobi Securities Exchange. Of course, there are 2 ETFs listed there, which, of course, if you don't know, ETFs are part of the broad indexes. But these 2 ETFs at the NSE haven't been gaining any huge traction recently. Even based on last week's numbers, which were still at 0%, I wouldn't really jump to say I'm really excited to jump on any ETF at the NSE. Maybe in future, if there's a clear catalyst and upwards price increase, or even in case we have more ETFs listing, I jump on ETFs. But then again, there are other ETFs out there beyond even NSE, which you could look to jump into. Even, for example, tapping into ETFs which are utilizing companies in Standard & Poor, S&P 500, for you to see how you can make some money. That's my reflection of how the NSE fared last week. And most importantly, the companies I've picked out across these different sectors are most likely, and I believe are most likely, going to continue doing well because of the different nuances I've shared with you. What do you all think? Do you think the companies I've shared are most likely going to continue doing well because of the fundamentals about these companies? Or do you think these companies will flop? If you are an investor out there, which companies are you banking on? Comment down below in the comment section. Let's continue discussing. I hope this is useful information to you as we get into a new trading week. This new week with new information, new analysis. Hopefully this is going to help you decide if there's any positions you are taking, you're letting go any of the securities. But before you do that, do your own research, do your own analysis. This one, I'm just sharing information with the public, but it's not financial advice. Do your own research before you jump on any particular stock or make any decision relating to your financial well-being and future. Cheers, guys, and you all stay safe.